Hi, welcome back to the series of videos on Ind AS, that is Ind AS with Accountsman. In this particular video, we'll be discussing Ind AS 21, which deals with effects of changes in foreign exchange rate. So let's get started. Ind AS 21 deals with effects of changes in foreign exchange rates. In short, throughout the standard, I will be calling this as ECIFER, ECIFER, effects of changes in foreign exchange rate. So, to start off the standard, we will definitely ask us the same questions that we usually ask ourselves. What exactly does the standard deal with? So, we know that there is some concept by name money measurement concept, which says that everything should be measured in terms of money in order to be recorded in books of accounts. But the concept starts where, this particular concept starts where the money that is used is different from country to country. In India, we follow Indian rupee. In Pakistan, there is Pakistani rupee. Whereas if we go to the entire European countries, there is euro and there is pound. If we go to US, we have dollars, and if we go to Japan, we have yen, and if we go to Australia, there is Australian dollar. So country to country, money is the basic unit of measurement, but that money differs from country to country, which basically requires a standard which will tell us how to account for transactions which are dealt in more than one currency. Meaning, when I go global, I will not buy all my plant and machinery equipment used for in the production exclusively from India. Or if I am a service provider, in order to render my services, I will not buy the entire equipment exclusively from India. I might import some import some equipment from a country outside India. And whenever I render my services or whenever I sell my goods, my consumer or my customer need not be restricted to the geographical location of our country. My customer can be sitting outside India, or my service recipient can be located outside India. In such a case, I will be dealing in more than one currency. When I buy a particular product, that is a property, plant and equipment from a country other than India, I would have to settle it in their currency. If I buy it from Europe, I would have to pay them in euros. If I buy it from US, I would have to pay them in dollars. So I basically have rupees, I would have to pay them in dollars. You get that? Or if I render service to them who are in US, they pay me in dollars, which I would have to convert to rupees later. So there is more than one currency involved. In such case, how to deal with this specific thing is what is given under this standard. So if I have to write it, we're going to account for changes in foreign exchange rate. So what are we going to deal? We're going to deal with foreign exchanges, meaning exchange between one currency to another currency. I'll give you dollars, you give me rupees, or I'll give you rupees, you give me dollars. So how to account for such transaction? You get that? So with respect to this standard, the foreign exchange rates that are there are basically categorized into three. Yeah, then the first one is the functional currency. The first and foremost one is functional currency, and the next one is foreign currency, and the last one is presentation currency. The entire standard repeatedly uses these three currencies. Once you understand and then figure out what each of these currencies mean and when do we apply which currency, then we'll have a very clear understanding about the standard. So let's get started to understand the first one. What exactly do we mean by functional currency? What does it mean? It refers to currency of primary economic environment. So three words, okay? Primary economic environment. I'll write it. Primary economic environment in which two things are done. One, cash is generated or cash is spent. This is the definition given under the standard for functional currency. So what exactly do we mean by functional currency? Functional currency is the currency of primary economic environment in which the cash is generated or the cash is spent. We'll come back to it little later as to how to determine functional currency. Yeah. Then the next one is foreign currency. What exactly do you mean by foreign currency? Foreign currency is any currency other than functional currency. Yeah, other than the functional currency, if there is any currency, such currency will be considered as foreign currency. And the last one that we have here is presentation currency. What do you mean by presentation currency? Currency in which financial statements are prepared. As I've written the definition in the standard for all three of them, now the session is open for discussion as to what exactly is functional, what exactly is foreign, and what exactly is presentation currency. Here, the emphasis is not in the currency in which the transaction is happening. The emphasis is with regard to the spirit of that particular transaction, as to what exactly is the factor that determines the heart of that specific transaction. So, we need to go with the environment which is of primary economic importance for that specific transaction, and not merely the currency in which the transaction is basically made. So, such primary environment which determines the price of the transaction, or which is the heart of the transaction, becomes the functional currency. Anything other than the functional currency becomes the foreign currency. And lastly, the currency in which the presentation of the financial statements is made becomes our presentation currency. Now, with regard to presentation currency, there might be a lot of questions that might arise. Why do we have three currencies? Because the earlier standard, accounting standard 11, basically used only two currencies, reporting currency, foreign currency. Whereas why do we have three currencies here? Here, what we need to very much understand here is this presentation currency what we have can be either functional currency or it can be foreign currency. You get that? Taking a company as an example, if there is a company which is having its major operations in India, which is the manufacturing of the product or rendering of the service is basically made in India, and the determination of the price is also basically made in India. For such a particular company, we call the functional currency as Indian rupee. Whereas if Indian currency is rupee, any other currency other than Indian rupee is our foreign currency. Example, yen, pound, sterling, Australian dollar, US dollar, everything is foreign currency. Now, this specific company which is having functional currency as rupee can be listed in the stock exchange in Europe, or can be listed in the stock exchange in Japan, or can be listed in Pakistan stock exchange, or it can be listed in the US stock exchange also. If this particular company is listed in a US stock exchange, this company has to prepare financial statements to be reported to the US stock exchange. So, the presentation of the financial statements is to be made in the foreign currency, that is dollars. You get that? So, what exactly happens in this particular scenario is, in the functional currency we keep the records, but the presentation currency we do the reporting. You get that? Or if it is a case where it is not listed in US, you get that? It is listed only in your BSC and NSE, then the reporting is also done in rupees. So, the functional currency is rupees, anything other than rupees foreign currency, and the presentation is also done in functional currency. So, our presentation currency can be either functional currency or it can also be foreign currency. I will make a note of that here. Presentation currency can be foreign currency or functional currency. It can be either. You get that? So, now we've understood the basic understanding as to what exactly is functional currency, what exactly is foreign currency, and what exactly do we mean by presentation currency. Next up, we need to figure out how to determine functional currency. In fact, the main standard revolves around this only. We have a lot of questions on functional currency determination all by itself in our material also. So, we need to see the factors which will determine the functional currency, or factors that needs to be considered for determining the functional currency. You get that? So, that's the point of discussion for now. It is not completely left to management discretion, that management decides that rupee is the functional currency, or management decides that dollar is the functional currency. No, management judgment or professional judgment is allowed, but that is to be done based on the certain facts and after considering certain pointers which are specifically mentioned in our Ind AS 21. So next up we'll see those factors which are to be considered in order to determine what exactly is our functional currency. Yeah, if you see the entire organization as a whole, firstly what it needs to do is raising funds. It has to first raise funds. This is something that I call as financing activity. Yeah, once you raise the fund, you need to now generate the product which will be sold, or you need to work on the services which are supposed to be rendered. So what is it? Making product or rendering service. If you have to make the product or if you have to render the service, there are a lot of items that will go into it. First one, cost of the item. Next one, labor that will go into it, or any other directly attributable expense. So these three items go in to make that product, or these three items go in to help us render that specific service. So once we do this specific thing, then we need to determine the selling price. Yeah, once we have the product ready or once we have the service ready, we need to put a price tag to it. We need to determine as to what exactly is the price that I'm going to charge to my customers to give this product, or what exactly is the price that I'm going to charge my service recipients in order to let them take this service from me. So I have to determine the service or a selling price. How to determine the selling price? Based on competitive environment. I'll basically see what exactly is the environment that I'm dealing with, and based on the determinant of my competitor and the industry, I'll determine the price. Once I determine the price, what will I do? I'll basically sell the services, sell goods or render services. So after determining the price, people will come to me and then approach me looking at the price, think about the affordability. I will basically sell the goods to them and I'll also render the services to them. Once I sell the goods or render services to them, I would collect the money from them. Whatever the money that I've collected from them, it has to be retained by me. So retention of money received from operating activity. You get that? And again I'll make the product and render the service. A lot of components will go into it, the cost, labor, directly attributable expenses. What will I do with respect to that particular thing? I'll determine the selling price and later render the service and then collect the money and again return. So it's a never ending process. It's like repetitive process. So these are the items that will flow in. So what I'm going to do is, these are the factors that are supposed to be considered in the determination of the functional currency. So the entire discussion that I'm doing now is determination of my functional currency. So out of these factors, the first one that is there, basically what is it? Our raising of funds, and the last one, the retention of the money in the raising from the operating activity. These are secondary factors. So what are these secondary factors? These are not of primary importance. So if I have to write here, I'll write here secondary factor, and this is also secondary factor. These are not given primary importance. What activities are given primary importance? Making of the product or getting the service ready, determination of the selling price based on the competitive environment, and selling of the goods or rendering the services. So these are primary factors. What are these? Primary factors. So firstly, I will look at these three items and I'll see what is the currency influencing the generating of the product. What is the currency influencing the purchase of the raw material? What is the currency influencing the labor cost? What is the currency influencing the expenditure incurred on manufacturing of that product or rendering of that service? What exactly is the currency which is determining my selling price based on the competitive environment? What is the currency in which I am basically selling my goods or rendering services? So these will be considered, and if these three are same currency, that will become my functional currency. If these three are different, like two of these three conditions what I told, one first primary conditions, say one currency and one will say some other currency, and I cannot decide which is more important, then I'll go to secondary conditions. So I'll use secondary conditions. Where exactly is the borrowing made, or what is the source of my revenue, source of my money in order to start my financing activity or entire operations, or where what exactly is this, to say the currency in which I'm storing the money that are basically generated by this operating activity. So that becomes my secondary factor. So firstly we'll use the primary factors and then try to determine my functional currency. If I can determine my functional currency based on the primary factors, well and good. If my primary factors will not be sufficient to determine the functional currency, then I let my secondary factors help me determine my the functional currency. So what are the conditions that we have? I'll write it down for you. Yep. Determining functional currency. This is based on two factors, primary, secondary. Yeah. What are our secondary factors? Secondary factors are financing activities like borrowing and capital, basically our source of income, or retaining funds from operating activity. If you want, I can write here currency of, here also currency of retaining funds from operation. So this is the secondary factor. So what exactly is our primary factors? Primary factors are currency influencing cost of goods or services, that will include material, labor and expense. All three together, whichever is the currency which will influence this particular cost of goods or service will become my primary factor. And the next one is with regard to determination of selling price based on what? Competitive environment. Done. And then the last one is with regard to sale of goods and services. As I told you, these will be the factors, but these are not the conclusive factors, because it might so happen that the cost of the goods or services is basically incurred in rupees, but the determination of selling price might have been done in foreign currency. Now if you take Infosys as an example, Infosys major revenue comes from the services what Infosys gives to foreign the organization which are there in US. So in such a case, what will happen? The basic cost that is going in, it's a service, so there is no cost, so there is no product here. So basic service provider, service that is being given is by taking the people on a job. So to all these people, the employment salaries are being paid in rupees. So the cost of the goods or services is basically rupees. Whereas the determination of selling price, how much would we charge them for the services that we are giving them? We will not take the Indian market into picture to determine this selling price. We will take what would be the cost for that US company to get such services in USA. So the items determining the competitive environment is dollars, and when we give this sale of goods or services, it's again dollars. You get that? So two of the factors says dollars, one of the factors says rupees. Okay, so as it's not a conclusive evidence, we might go to secondary evidence. Currency of financing activity. So the basic funding or borrowing, it's basically rupees. You get that? Retaining of funds. So they might retain the money in rupees. You get that? So three of the factors are rupees, two of the factors says dollars. So what exactly is our functional currency? That's a question. Now you might say, sir, 3 over 2, like 3 says rupees, 2 says dollars. So can I say my rupees is my functional currency? No, it is not. That's how we go, because primary factors will have greater importance than the secondary factors. So primary factors only one says rupee and 2 says dollars, whereas secondary factors both says rupee. Can I conclude it to my rupees, Or can I say primary factors, two of them say dollars, so can I say it's dollars? No. So these are not deterministic in nature. These just give basic facts based on which the determination is to be made. You get that? So they give us the determining criteria, but they are not conclusive. So determination is basically made on what? Yeah, management judgment. You get that? Or I'll tell professional judgment. You get that? So we need to do management judgment or professional judgment to determine what exactly is the functional currency. I'll rewrite it. Management judgment or professional judgment. However, this management judgment or professional judgment cannot be baseless. Now the management cannot tell. The Infosys management today says, okay, by way of my judgment, I will say, what do you say, yen as my functional currency. That has no relation. Or without considering this primary factor and secondary factor, they will straight away say dollar is my functional currency. Can they say so? No. The management judgment or professional judgment is required, but on the basis of facts. Facts and determining conditions. If all of the primary factors says rupee, then rupee has to be the functional currency. Then professional judgment will not come into picture. If it is like few of the primary conditions says rupee, few says dollar, then the management judgment or professional judgment come into picture. You get that? So this is how we basically determine our functional currency. However, this is not the complete discussion on functional currency. With regard to foreign operations, there are few add-ons that we need to discuss, but I'll discuss it at the later stage. I don't want to tell it now just because the standard tells it now. I have a specific order in which, or the flow of things in which I'll tell. So this is still the introduction stage of the standard, and we'll only see this part there, and later we'll see the other thing. Next, I decided my functional currency once. Is it like forever, or can there be change in it? Yeah. So the next point of discussion is change in functional currency. Answering this specific point, Infosys, though it generates basic revenue from in dollars and major funding is in rupees and retention of the funds is done in rupees and the cost of goods is in rupees, so the functional currency which is identified by Infosys under their Ind AS approach is rupees only. Yeah, just for concluding that specific example. Yeah, change in functional currency, is it allowed? Yes, it is allowed. It is allowed. But when is it allowed? It is allowed when prevailing facts or underlying conditions change. You get that? So the prevailing facts or underlying conditions, when they change, the functional currency is allowed to be changed. Meaning there are certain facts based on which I determined a specific currency as my functional currency. Now those facts have changed. So the basis on which I determined the functional currency has changed. So my functional currency has to change. If you go back to our example, maybe assume the entire financing activity, entire borrowing or entire capital to Infosys is in rupees. You get that? So we determined our functional currency as rupees. But over a period of time, what happened? Entire Indian company of Infosys has been acquired by some foreign company now. So the entire funding is not in rupees now. In such a case, till now Infosys considered functional currency as rupees. Can they now change their functional currency from rupees to dollars? Yes. Why? How are they allowed? They are allowed because the prevailing facts, that is the financing or the underlying conditions, have changed. Then they are allowed to be changed. Whenever this change happens, the change has to be done prospectively from the date of change. Yeah, we are not going to do retrospectively for the past financial statements or not. So it's going to be done prospectively. You get that? So the change in the functional currency is allowed when the prevailing facts or the underlying conditions go for a change. So this is what we basically started with. And what exactly does this standard deal with? You get this? So discuss this part. Yeah, come on. So what exactly does the standard deals with foreign exchange currencies transactions. So basically it's categorized into two. One is Forex transactions, next one foreign operations. This is our entire standard. Forex transactions means basically what are the transactions which are dealt in foreign currency. Purchasing of an equipment from outside country, or sale of an property, plant, equipment or investment property to foreign body, or buying raw material from foreign country, or selling raw material to foreign country, or receiving services from the foreign country, or giving services to foreign country person, and transaction is dealt in foreign currency. So that is our Forex transactions. Foreign operations is with regard to, assume that I am a holding company and I have subsidiary, associate or joint venture in foreign country, that is other than in the country in which I am functioning, or there is an holding company in some other country which is controlling me. I am its subsidiary, or if I am not subsidiary, what if I am its associate, or what if I am its joint venture? Then how do we deal with the entire thing? That is given in the standard. So these are the items that are covered in the standard. When we say what are covered in the standard, we should know what are excluded in the standard. Exclusions from standard, that is, can I write exclusions from Ind AS 21? From Ind AS 21. So items which are excluded from Ind AS 21 are those items which are specifically covered in some other standard. So we do have Ind AS 109. Ind AS 109 specifically talks about hedge accounting for foreign exchange currencies or for foreign currencies. Okay, foreign currencies. Yeah, when there is a specific standard covering hedge accounting specifically, that is excluded from the purview of Ind AS 21. You get that? Next one is with regard to Ind AS 7. Ind AS 7, as we've discussed previously, it talks about statement of cash flow. So statement of cash flow specifically covers how to present the cash flow statement relating to foreign currency transactions. So there is a specific standard covering the presentation of cash flow statement regarding to foreign currency transactions, that is out of the purview of our Ind AS 21. So I am not telling that all the cash flows from foreign currency is excluded from this. Cash affecting foreign currency is covered in Ind AS 21, but it is covered under Forex transaction. Presentation of cash flow statement relating to foreign currency transactions is not included here. How to present that foreign exchange transaction in cash flow is covered under Ind AS 7 only. What is it? So cash flow presentation relating to foreign currencies, that is covered under Ind AS 7 specifically, so it is excluded from the purview of our Ind AS 21. And the last exclusion comes in Ind AS 101. Yeah, Ind AS 101, that is first time adoption of Ind AS. In the first time adoption of Ind AS, if you have claimed any exemptions claimed about foreign currency items, there are certain exemptions allowed. If you have claimed any exemptions relating to foreign currency items, those are the exemptions that you claimed, so you need not follow this standard. So the standard doesn't force you to follow any specific policies regarding those specific items against which we have claimed exemptions given to us under Ind AS 101. So these are the three specific exclusions. So other than that, we would have to deal with Forex transactions and foreign operations in our coming up video. We'll deal with them in detail. We'll see how to analyze foreign exchange transactions, what rate to consider, whether to take the transaction date rate, that is spot rate, or to take the forward rate, or do we take something which is related to our closing rate, what are monetary items, non-monetary items, and how do we deal with foreign operations, how do we handle with respect to our subsidiary, and if we remember regarding combinations, there might be intra transactions, you get that, intercompany transactions. So how do we handle those specific things? If the company is going for disposal, how do we handle? So all these things we'll discuss in our upcoming video regarding our Ind AS 21 foreign exchange transactions. So this is for now, wherein we discuss what exactly is the standard talking about, what exactly do you mean by ACFR, and what are the currencies that are involved, that is functional currency, foreign currency and presentation currency, and how do we determine functional currency, and what are the primary factors, what are the secondary factors, when is it allowed to be changed, and what is the complete thing that is covered in our standard, and what is excluded from the purview of this standard. So see you all in the next video with continuation on remaining topics in our Ind AS 21. Till then, stay in the game.